All right, let's talk about Purple Innovation, ticker PRPL. Their latest earnings report was a real head-scratcher. And the market's reaction? Well, that's where things get really interesting. So let's dive right in.
So here's the big puzzle we need to solve. Purple actually beat their earnings estimates. You'd think that's good news, right? Well, the stock immediately tanked by 11%. So what gives? What did Wall Street see that made them hit the sell button so hard? That's exactly what we're going to unpack.
Okay, so first things first, let's get our hands dirty with the actual numbers. This Q3 report was, a classic case of a mixed bag. And it really all boils down to the difference between the top line and the bottom line. And there it is, a real tale of two cities right here on the income statement. On the one hand, their earnings per share, or EPS, came in at -8 cents. Now, that's actually a penny better than the -9 cents analysts were looking for. Small win, but a win nonetheless. But then, you look at revenue. They brought in about $119 million, which missed the mark by over $4 million. So you've got this tiny beat on the bottom line, but a pretty clear miss on the top line. And this chart really puts that conflict into perspective, doesn't it? That EPS beat, it was an 11% positive surprise. That's not bad at all. But look at the other side. That 3.6% revenue miss is what everyone zeroed in on. And you have to understand, in the current market environment, investors are just brutal when it comes to any sign of weakness in sales. Top-line growth is king, and Purple didn't deliver. That's why they got hammered. So the market is obviously freaking out. But if you listen to management's conference call, you'd think you were hearing about a completely different company. They basically ignored the revenue miss and spun a very, very different story. For them, this wasn't a failure. It was a turning point. Yeah, the CEO, Rob DeMartini, he came right out and called it an important inflection point. He was basically saying, hey, forget the small revenue miss for a second. The real story here is that we finally stopped the bleeding. After quarter of sales going down, they finally put a stop to it. And this, right here, is the entire foundation of their optimistic story, the bull case. And look, to be fair, they had some serious operational wins to back up that talk. First off, check this out. A massive improvement in gross margin. It jumped by 1,310 basis points. That's huge. It brings their margin up to almost 43%. This isn't magic. It's the direct result of all the restructuring and cost cutting they've been doing. Next up, they actually managed to get back to a positive adjusted EBITDA. Now, okay, it's only $200,000. But listen, when you're coming from a $6.4 million loss last year, getting back into the black, even by a little bit, is a pretty big deal. It's a huge psychological milestone on that road back to being profitable. And point number 3 for the bulls, their brick-and-mortar stores are actually doing really well. Showroom sales were up a super strong 12%. So what this tells you is that in the parts of the business where they have direct control, where they're face-to-face with the customer, they're knocking it out of the park. So let's just quickly recap management's side of the story. You've got new products that are selling well. You've got a huge partnership with Mattress Firm that's on track. The company is getting its costs under control and becoming more profitable. And they were confident enough to stand by their original forecast for the full year. So from where they're sitting, the turnaround plan is working. But as we know, the market heard all of that and just said, no, not buying it. The reaction was immediate and it was brutal. I mean, this timeline just says it all, doesn't it? Look at this. The stock was sitting at about 81 cents. The report comes out, boom, it drops 11% the very next day. Then you get this quick little rally a couple of days later. Some people clearly thought it was a buying opportunity, but it just couldn't stick. The stock dribbled all the way back down. This kind of crazy up and down action, it just screams one thing: investor uncertainty. Nobody knows what to believe. So what's behind all this doubt? Well, the bear case is pretty straightforward, and it's built on 4 big worries. First, that revenue weakness, it came from their e-commerce sales, which were down almost 10%. That's a really bad sign. Second, and this is a big one, the company just got a non-compliance notice from NASDAQ because its stock has been trading under $1. That raises the very real risk of being delisted, which is a huge red flag. Third, when you compare Purple to other retail stocks, it's really lagging behind. And finally, the whole mattress industry is kind of struggling right now. It's flat, everyone's running promotions. It's just a tough environment to try and grow in. So there you have it. You've got the company saying everything's fine, the turnaround is working, and you've got the market screaming, we don't believe you. So who's right? What do we do with this stock? All right, here's our official take from Talk Tickers. we're slapping a market perform rating on this one. And here's why. You absolutely cannot ignore the progress they've made on things like gross margin and profitability. That's real, tangible improvement. But at the same time, you'd be crazy to ignore the massive risks. The delisting notice, the stock being under a buck, the online sales falling off a cliff. There's real potential here, for sure, but the risks are just as real. This table really lays it out perfectly. It is a complete tug of war. On the bull side, you've got those strong margins, or a turn to positive EBITDA and growth in their physical stores. But on the bear side, you have that weak e-commerce, the delisting risk, the sub-dollar stock price. I mean, this is the definition of a battleground stock. Okay, so if you're thinking about how to actually play this, we've got a speculative idea we call the turnaround bet with an escape hatch. Here's how it works. Step 1, you buy the stock. You're making a bet that management can keep delivering on their promises. But, and this part is absolutely crucial, at the same time, for step 2, you buy some out-of-the-money puts. Now, if you're not familiar, you can think of a put option as basically an insurance policy. If the stock totally crashes because the turnaround fails or they get delisted, those puts can go up in value and help cushion the blow. It's a way to bet on the upside while building in a safety net. Your target would be based on them nailing that Mattress Firm rollout and getting a good result from their strategic review. And we have to end with this, of course. A final, very important reminder, this is not financial advice. Everything we've talked about today is just for informational and entertainment purposes. You absolutely have to do your own homework before you ever make an investment decision.